Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Santosh Nair.
Well, Santo, the monsoons have hit Mumbai and Delhi, but stocks really failed to make a splash in today's session, given the fact there was a pretty range-bound session with the Nifty clawing back from the day's low, but ending below that 18,700 mark, and the Sensex is also just a shade below that 63,000 mark in today's session. But there was some bit of strength in the broader end of the markets, and if you look at the Nifty movers, you had the likes of Cipla, because pharma as a pack is doing well today. You had the likes of Hero Motorcorp, Tata Consumer, Divi's Lab, M&M. These were some of the top performers in today's session. On the losing end, you had the likes of NTPC, TCS, Coal India, Reliance Industries and Power Grid. A lot of movers, when it comes to Nifty 500 as well, ICICI Securities on the back of, the board taking cognizance of the delisting plans. That stock was up 10%. You have Sun Pharma Advanced, Ratan India, Mazgaon Dock, SJVN, PB Fintech. Some of these stocks were among the top movers on the Nifty 500 index. On the losing end, Shree Cements, there is a, there are searches going on in Rajasthan premises because of, some 23,000 crore worth of tax evasion allegations on the company. So that is why the stock has been under pressure. In fact, today as well, down 6% or thereabouts. Credit Axis, Grameen, Aether Industries. Remember last week it had, raised some funds via QIP. So that stock is under pressure today. Last week it was on the gainers list. BEML, Godfrey Phillips and Lakshmi Machine are some of the other losers on the Nifty 500 index. But aside of that, any other movers and shakers did you spot in today's session, Santo?
Well, as you mentioned earlier, Nandita, clearly all the action right now is on the small and mid cap stocks, and particularly the small cap and micro cap. That seems to be on a one-way ride right now, and some of the old hands in the market now feel that this is probably now getting into bubble territory, probably as far as a specific portion of the market is concerned, because this also in a way reminds for those who have been around since 2018, 2017, that's what you had seen immediately after the demonetization. You saw a big run up in mid cap and small cap. But yes, and then the same story plays out again. They enter the overvalued territory, big sell-off which lasted for the next couple of years. So there is some bit of concern. Yes, the macro indicators are showing, they're flashing green at this point in time. There's plenty of reasons to be cheerful, but at the same time, let's also not forget that liquidity is also playing a very big role in this rally at this point in time, and that's why you're seeing this kind of run up in second line, which is mainly the mid cap, small cap, and particularly the micro cap stocks.
Right, so valuations may seem to be a concern when it comes to the broader end of the markets at the current juncture. Although, experts believe that small cap valuations may not really have, entered the danger territory, because it's the mid cap end of the markets that, where valuations are or may be looking a little more stretched.
But Nandita, well, it depends on, if you believe that the numbers are going to be very good and that the kind of growth rates that these companies have delivered over the last few quarters, if you think that they can sustain, then probably the stocks don't look all that expensive. But if you're a little skeptical, then probably the stocks may seem expensive to you.
All right, but a lot of experts I have spoken to have indeed said that the opportunity now lies in the small cap end of the markets. However, they have also cautioned that you have to be very selective when you choose the companies out of that space. But with on that note, let's take a look at some of the stocks that are on our radar this afternoon, starting with ICICI Securities. Now, it's a surprise news flow that came in the morning that the board will be considering delisting of the shares. And in fact, the board will be meeting on the 29th of June to consider delisting, something which the market wasn't really expecting. But participants believe that it comes at the right time, given the fact that it will give freedom to the company to innovate, in a highly disruptive market. Now, what has happened is shares, of course, hit a fresh 52-week high today. Now, ICICI Bank holds nearly 75% stake in the company, and most of the, when you look at the delisting move, it has to be approved by the minority shareholders. Only then they will go ahead with the delisting. Now, what happens is shares usually rise on hopes of a higher exit price that they may get from the promoters as they buy back the shares from the shareholders. So that is why there's a bit of a euphoria when it comes to this news flow, and that's why the stock has risen to 52-week highs. Now, but reports suggest that the delisting may not happen via the reverse book building process. It may in fact be a share swap between ICICI Bank and ICICI Securities. So that's something, of course, it is report based. Obviously, we'll have to wait and watch as to what the board decides, and that is something we'll get to know on the 29th of June. Talking about when the stock listed back in April 2018, the appetite for the IPO wasn't much. It wasn't really oversubscribed. It was rather undersubscribed, and because of which the size of the IPO was reduced, and the stocks also listed at a discount of 17% or thereabouts. But if you look at the returns over the last 1 year, it has given a solid 40% gains over the last 1 year, the share prices. And and if you look at the valuations as well, it is fairly priced, given the fact that it's the PE is much lower than the sector PE, and return ratios had also been healthy. But there's a lot of excitement around the news that has come in, the delisting. Of course, we'll have to wait and watch as to how or what the process will be. But as of now, reports are suggesting that it will be a share swap and not a reverse book building process. So we'll have to see how it pans out.
Well, it seems to be a classic case of the short term investors getting a better deal than the longer term investors, because for instance, if you were holding on to ICICI Securities shares since IPO, the returns have not been all that great. It would have been what at 520 was the issue price, and at 600 plus something is what it is at. So less than barely 30% over the last, or not even 30% over the last 5 years. So that's poor.
But it's only if you compare it with last year, over the last 1 year, the stock has given a 40% return. But since IPO, not
a little
much.
Conflicted here, because it's also a period right now. Broking firms have had a very good run in FY21 to some extent, and FY22. So those were the 2 years when you saw broking firms really rake in all the money because of this huge stampede of retail investors towards the stock market. That is coming off a bit. Regulations are getting a bit tighter, and that's also reflected in the lower valuations that the market is now assigning to the broking industry in general. If you see, the last couple of months again have been slightly because of the booming market, you've again seen a fresh uptick in the number of broking accounts being opened. But otherwise, if you take the last 6 months or so, clearly there's some bit of a slowdown here. So very hard to make out, how should ICICI Securities investors actually take it, because there is no saying whether this phase that we are seeing, for how long this will persist. At the same time, if, as the report suggests, it's a share swap, then it's a win-win situation for both, in a sense that ICICI investors do get exposure to a well diversified business. So that's clearly a good situation for clearly the ICICI investors.
Right, that was the first talk on my list, but Santo, what's on your list?
So Dr. Reddy's overall pharma stocks now seem to be the flavor of the season. You're seeing a good appetite for pharma stocks in general. Dr. Reddy's today rose close to about 1%. Now this despite the fact that some of the brokerages have come out with bearish calls on the stock. You have Citi, which has retained its sell rating on the stock with a target price of less than 4,300 rupees, and you also have Kotak, which has a reduced rating on the stock. Now, the bull case for Dr. Reddy's is mainly that the price erosion in the US generic drug market, which was quite sharp and which was hurting players like Dr. Reddy's, that has eased a bit. Now, one of the reason also is that interest rates in the US have been steadily rising, and that's been adding to the debt burden of many of the generic drug makers in the US. Earlier, there used to be a stiff price war. Now, US generic drug makers are no longer in a position to undercut as they were till some months back. That's one of the factors. Secondly, the company, Dr. Reddy's management, has maintained its operating profit margin guidance for this year. Last quarter's numbers were not all that great. They fell short of market expectation, but if you see, the stock has rallied by close to about 15% over the last 1 month. The company is making a lot of investment in biosimilars. Now, the bear case, the argument against Dr. Reddy's at this stage, which some of the brokers like Kotak and Citi are saying, is that at current valuations, most of the positive, that's mainly the stabilizing of drug prices in the US generic markets, that's already captured, as well as the fact that the company is trying to make big strides in the biosimilar segment, and although and also give more focus to markets like India.
Right, there was a development just a couple of weeks ago, if I'm not mistaken, that, its API unit has cleared the US FDA test. So that's one big positive that has been working in favor of Dr. Reddy's. And of course, I was talking to a couple of market experts. They believe that, in fact, pharma could emerge as a dark horse, this year going forward, given the fact that there is sector rotation at play in the market, and a lot of these, investors are buying into pharma stocks, and because of a lot of clearances that may come about, these stocks, may be poised for a good up move going forward.
Your stock, Nandita.
Yeah, the next stock on my radar is HUL. Of course, big changes, happening there, given the fact that Sanjeev Mehta kind of logs out as the MD and CEO today, and in fact Rohit Java officially takes over from tomorrow. Now, Java is, of course, a Unilever veteran who has led transformation in the Chinese as well as Vietnamese businesses. So he's no stranger to the Unilever setup as such. But his task will be cut out, given the fact that he has to focus on volume-led growth, because till now HUL was the growth was mainly led by price or value, right? But as inflation pressures ease, there is a slowdown in that end of the segment, right? So Java's main task would be to get the volume-led growth going for HUL, and also, of course, to lead bigger and better transformation at the company, given the fact that there is stiff competition and competition from players like Reliance and direct-to-consumer companies. So that is one task that is cut out for Java. But aside of that, when you look at Sanjeev Mehta's tenure, the market cap of the company HUL grew by 3.5x, and so did share prices. So he has a tall task ahead of him. He has big shoes to fill. But of course, as I was saying, he's no stranger to Unilever. So we will have to see how he takes forward the Unilever growth story when it comes to HUL.
And he has to make things a little more harder for Sanjeev Mehta's success is the fact that already FMCG stocks have had a very good run up so far. Also, market is now beginning to fret about valuations. Plus, we are not yet seeing the recovery in rural markets, and the markets the stock prices seem to be reflecting that. So, how things play out over the next 6 months, that still remains to be seen. The last stock on my watch list this afternoon is Voltas. It was a big loser on Friday. Today, it somehow managed to hold ground. However, the near-term outlook for the stock continues to remain bearish at this point in time. And according to a report by Daulat Capital, AC sales of room air conditioners during the current quarter, they've been fairly tepid, and this happens to come on the back of an unfavorable base. So you have the base effect playing in as well, which could be one of the reasons why you're seeing a bearish trend in not just Voltas but air conditioning stocks in general, that is both Voltas as well as Blue Star, the two major listed players in this space. And also with Voltas, the issue has been that operating profit margins has been under pressure for quite a few quarters, and brokerages tracking the stock do not see that changing anytime soon. And in fact, that was one of the major reasons for UBS to downgrade the stock to neutral. And we are already seeing the pressure on the Voltas stock. It is hovering close to a 52-week low at this point.
Right, as you mentioned, UBS had also downgraded the counter, a few days ago, in fact. But experts say channel checks are suggesting that there may have been a pickup in AC sales in the month of May due to the heat wave and stuff. Of course, we'll have to come back to it and see when the data comes out as to whether or not that has happened or not. But as of now, I think Voltas has been losing market share to MNCs, and that is something that has got the street worried, and the near-term prospects, as you mentioned, aren't looking all that bright for Voltas. Well, with that, I think we've come to the end of this edition of Closing Bell. But if you have any comments, leave them in the comment section below. And of course, I'll be back with the markets at 8:30 a.m. Tomorrow morning. So don't forget to tune in. But for now, from me and Santo, thanks a lot for watching. Stay tuned to Moneycontrol for all your other news and financial updates.